Godrej Consumer. Let's try to pull the stock up. The stock is tanking in how in trade today, largely on account of probably profits being flat where Q3 stands, and of course there was an Investec note that has downgraded the counter. But let's welcome in Asif Malbari, the CFO of GCPL, to understand as to what were the hits and misses this quarter. Asif, always a pleasure speaking with you. Thank you so much for taking out the time. My first question to you is, what were the kind of hits and misses that you saw this quarter, and how should you assess the impact of recent GST changes so far? Has that already been incorporated, or are you still looking at more benefits coming in?
Perfect, great. No, so we are very happy with the performance in totality in this quarter. A good set of numbers, both at a consolidated level and at an India level. Strong growth of 9% at an overall level. Strong underlying EBITDA growth. If you have to see even PAT BEI, a growth of 120 IYA, so a good set of numbers. In India, again, good to kind of see the double-digit growth come through, although I would say a part of it is to kind of do with a bit of a transitionary GST impact between Q2 and Q3. But yeah, volumes on a YTD basis have also kind of come in strong in India. The most important thing I would say has been the margin reset. India margins have come into the normative range. We've kind of delivered close to a 25% EBITDA. We had guided the street that it will be a first half, second half journey. First half will be a bit more of a pressure in margin, and by second half we'll come to it. But it's kind of good to see that we've been able to land the numbers there. Yeah, so I think that would, so to me the hit would be for the quarter and on YTD, growths broadly there at a console level of 108. And I think from a Q3 perspective, margins there as where we want them to be. So yeah, these will be the two kind of pieces. From a challenge perspective, I think the challenge has been the first half in terms of volatility. First half, there was a lot of volatility in the first two quarters, oil prices, GST, transition. Yeah, I'm hoping that most of those factors are behind us.
Right. So, Asif, you've already, come back to the normative range of margins. Just want to understand how are you viewing margin trajectory from here on? Because on your con call, Sudhir also did mention that you might be looking for margin uptick going forward. How is that looking like, and how sustainable is it?
Sure. No, so for us, I think we're quite happy with operating the business between 24% to 26% EBITDA range. I think that's a very healthy margin range to operate at, especially given the fact that we are investing and incubating a lot of new categories. And we have been fairly successful in kind of entering into new times and kind of building brands. And hence I would say it should be a range bound. We would look at a few bits of margin expansion, but largely the idea would be to kind of invest that back in terms of higher growths. Yeah, that's what I would say for the India business. When it comes to the international geographies, if you had to actually see our trajectory over the last couple of years, we have over the last 2.5 years taken a fair amount of margin improvement in the GOM cluster. And yeah, that's the space where we would say there is still some piece of margin improvement work left. So we definitely will look at margin improvement in our international geographies, but in India, look at stronger growths.
Okay. In terms of volume growth, you did 7% this quarter, and Sudhir also again mentioned on the call saying that sequential volume uptick is something that you're expecting. What is the rough volume guidance range that you would be looking at, let's say, 18 to 24 months down the line?
Yeah. No, so I think there are two things which we've always spoken about. We've spoken about a North Star being getting into a double-digit growth, and that remains a North Star for us. Giving a range would be, I think, inappropriate for me. You know where we are, you know where the North Star is. Definitely, we will kind of keep working to kind of sequentially improve from where we are to get to a North Star.
Got it. As if you've completed your entire acquisition of Mushtaq in November itself, just want to understand the visibility of revenue growth that you're looking at from this particular acquisition, let's say 2 years down the line. What is the kind of visibility in terms of top line growth?
So I think on some of these acquisitions, it's less to do with growth. It's more to do with what's the overall size of price, and over a 3 to 4 year period, can you kind of multiply the business rather than what is the percentage growth? So I think that's the way we would see it, and hence it's not about a quarter or two, but say over a 3 or 4 year period, can we kind of get this business to become say 2x, 3x of where it currently is?
Okay, as if we've seen that largely, the government has tried its best to push consumption as a whole, right? You have your GST rate cuts that have come in, income tax cuts that have come in, but has there been underlying demand change is what I want to know, both in terms of rural as well as urban?
No, so I think overall the consumption trends are broadly kind of similar between Q1, Q2, Q3. There has been a bit more of normalization and stabilization, which Q3 has seen. Consumption trends normally do kind of build sequentially. It's never a spike up, which happens over a short term. We are hopeful that in some of the categories which has seen the impact of lower GST rates, we should see sequential kind of improvement in the demand pattern. So yes, it should start happening, but it should happen sequentially.
Got it. And how are you approaching pricing decisions in the second half? I mean, Q4 is my understanding, because raw material prices have been benign now. So do you see further room for price actions in Q4? How are you viewing that?
Sure. So no major significant price increases. I would say give or take. We do kind of get around, anything between 1% to 1.5% to 2% kind of range of price increases. It's a bit calibrated. There is some improvement which we do in terms of price pack architecture, some increases on some products. That's the kind of broad range of price increases which happens under normal kind of commodity conditions. I would say the current situation is those kind of commodity conditions. There is no sharp increase in commodities, and hence that's the kind of price increase to expect.
Right, so that's Asif Malbari speaking about what the future holds for the company. Asif, thank you so much for taking out the time and speaking with us at NDTV Profit, and all the best for Q4.